So what went wrong? Yeah, well, lots can go wrong. I don't, even with the current drop in price, I don't see another asset with a risk-return profile as good as Bitcoin. Satoshi returning would not be a very wise move because it's very nice to have a founder that is that's untouchable, right? That's not, so there's no FBI or CIA or government or criminal organization that can get a hand of him and make him do things he doesn't want to do. Or it's very nice that there is no central point of failure founder. Yeah, and the first coins will of course not move because that's hard coded in the Bitcoin code. But even if the second or the 10th or the 100th block, if those coins would move, that would be another good thing in my eyes as well. I hope that never happens. But even if it happens, right? Satoshi is, thought to have 1 million Bitcoins, which is a lot. Satoshi has 1 million of the total 19 Bitcoins at the moment. But there's more people that have a large stash of Bitcoins. For example, the Winklevoss brothers, also about the same amount of Bitcoins as Satoshi has. And I guess we're in discussing this, we're perhaps making Satoshi a little bit too big, giving him too much credit, although with Satoshi that's almost impossible. But what he did, I guess, is a proof of concept of combining elliptic curve signatures and SHA-256 proof of work and peer-to-peer, those three technologies into one working system, a monetary system, e-money, an e-cash. But with all the rough edges and all the, it was just a proof of concept. And he stayed for a year to guide a little bit of the discussion and development around it. But then he made the very wise and for sure very, very difficult decision that every founder has to make to go away and to let your baby develop by other, not like your real babies, right? Your children. There is a moment that they learn more from their friends and their teachers than from you. Yeah, let them go. And I guess Satoshi did that very well. And he knew that he alone would be a bottleneck for the development and that a group of thousands of developers in an open source setting would be much better than him alone guiding, because everybody would be looking at Satoshi. What would Satoshi do? And what would Satoshi say? We shouldn't do that. I guess Satoshi did the one good thing, and that was to leave and let it grow through the community. If you allow me to go 2 months further back, so I was able to put those predictions out in June 20th. It would be 47 in August, 43 in September, then 63 in October, 98 indeed in November, big miss, and 135 in December. So after those three hits, some people indeed thought I was Satoshi or a guy from the future. So what went wrong? Yeah, well, lots can go wrong. All models are wrong and some are useful. George Box used to say that. It's a very famous saying. All models are wrong because they're simplifications of reality, but they can be very useful, like the navigation in your car, for example. It's not reality, but it brings you from A to B. And the same is true for models. So what went wrong in this model? Lots has happened, right? We have seen since we last spoke the Chinese mining ban. So half of the mining capacity was located in China. It was banned and it relocated to all other places, the US among them. We have had an Omicron, a new COVID variant that gave some flashbacks to March 2020 when the market dipped to very low levels, including the Bitcoin price. And we've seen the Evergrande default now recently. So there's all sorts of news that sort of impacts this Bitcoin price that is, of course, not in the model. One very important thing about the floor model miss 98,000 in November is that this is a first time in 10 years that we see this miss. This model has, of course, in sample, so with hindsight, hold for 10 years. But now this is a first miss, and it could be an outlier. It could be a one-off or 2 months off, and then a sharp V-shaped recovery back to the model lines. Or it could be that the model is wrong, is off. Something changed. The model is not usable anymore. And I'm still not at that point of making that decision, whether the model is just off temporarily because of an outlier, a black swan or whatever, or that the model can be thrown into the trash bin and is off structurally. I did not sell a Bitcoin, a fraction of a Bitcoin. And like we talked last time, you always start with a small allocation of 1 or 5 or 10%, depending on your risk appetite. But then, after a couple of years, these growth rates in the past, at least, that small exposure turns out to be indeed 50+% of your portfolio, and it's still 50+. I have friends that have very simple asset allocation rules, like, okay, I want to have 25% in real estate, 25% in gold, 25% in stocks, and 25% in Bitcoin. Yeah, well, I rebalance that yearly or quarterly or whatever, and that would be like conservative. I think that would be not a bad approach at all. On the other hand, I must say, it's always difficult, even for institutional investors, but they're bound to their mandates. I am not personally. It's always difficult to sell the fastest horse, to speak with Paul Tudor Jones. Yeah, I sort of ignored the mandate, my personal safety for a little bit, and let the fastest horse run wild. Bitcoin is not unfailable. It's not like, so it can fail, and of course, as long as the risk return, and that's also the reason why I don't rebalance or rotate out of the asset into some other asset, because the question then is, what asset has a better risk return profile? So the risk return profile of Bitcoin is exceptionally well, and I guess better than any other asset I see right now, and I have ever seen, because the Sharpe ratio of Bitcoin is larger than 1. The average yearly return is higher than 150%, 160, 180, somewhere about that. And the volatility, historically measured in standard deviation of returns, or looking at option prices, implied volatility, the risk is about 80%. So we have 150% return versus 80% volatility or risk, which is a Sharpe ratio of larger than 1. And there are not so many assets that have a Sharpe ratio larger than 1. So that is one very specific thing I look at, and that gives me a hard time looking for other alternative investments. Well, I could rotate into, when Bitcoin goes up above my mandate or above my personal levels, when that risk increases even more, which is maybe not that possible, or the return comes down. The risk will be high, is high, and will probably be high, but the return could go down. For example, this year, if we look at this year, it's only 66%. If I say that, I always have to laugh. 66 is not bad, but with 80% volatility, that makes a Sharpe ratio of lower than 1. If you would have 1 or 2 or maybe 3 years of lower risk return or risk-adjusted returns, that would give some thoughts, and that would probably make other assets more attractive. So there's lots of reasons why that could happen, but up till today, I don't, even with the current drop in price, I don't see another asset with a risk return profile as good as Bitcoin.